It's Tuesday, 18th of November, 2025. Welcome back to your news update on Blip Brief. Small, but almost everything updated every weekday. We're diving into a really fascinating set of sources today that reveal a deep split in the Indian economy.
A huge split.
Yeah, I mean, on the surface, yesterday's market close looked resilient. The Nifty climbed about 0.4%.
And the Sensex registered a gain of around 0.46%. Looks solid on paper.
But if you stop there, you miss the entire story. These are not broad, confident gains at all.
Not at all. There's symptoms of, aggressive internal rotation, and it's all being driven by these conflicting policy signals.
That divergence is really the key takeaway, isn't it?
It's the single most important one. And the index stability we saw was propped up by a couple of things outside of just equity trading.
Right.
For one, the rupee appreciated against the U.S. dollar, which always helps sentiment. And two, and this is critical, lower global crude oil prices.
That always puts a floor under things for an economy like India's.
It does. That relief on crude prices puts a firm floor under the currency and equities.
Okay, but let's look under that floor. We saw sectors reacting, well, violently to these external signals. The domestic champion yesterday was the Nifty PFU Bank Index.
Oh, absolutely. It surged a significant 1.17%.
That's a powerful move. So what makes the PSU Bank specifically so buoyant right now?
It's pure leverage on future policy. The market is aggressively pricing in anticipated RBI rate cuts.
Okay.
And while rate cuts help all lenders, PSU banks just have this unique sensitivity to the overall policy rate environment. Investors are betting these cuts will dramatically boost profitability after a pretty tough period of squeeze.
So domestic optimism is driving that PSU surge. But then you turn your attention to the Nifty IT Index.
And it's a completely different story. It plummeted 1.03%.
That's a big drop. It wipes out a lot of previous gains. You can almost feel the chill wind blowing in from Washington, D.C.
You absolutely can. That 1% drop is the market's direct interpretation of U.S. Fed Chair Powell's very cautious commentary.
So global investors are getting nervous.
Exactly. They're repricing expectations. If the Fed is less dovish, it means U.S. corporate spending, which is the lifeblood of Indian IT, is likely to slow down.
Less spending in the U.S. means immediate margin pressure here.
That's it. The IT sector is just reflecting the new reality that global liquidity won't be as cheap or aggressive as everyone hoped.
And that fear sent money scrambling for cover, right? We saw defensive sectors gaining ground.
A classic flight to safety. Nifty Pharma advanced about 0.59%.
And Nifty FMCG gained 0.57%.
It's textbook investor behavior. When uncertainty spikes, you run to sectors where demand is non-negotiable. People still need medicine and groceries, regardless of the Fed's balance sheet.
Right. But to really get the market's underlying health, you have to look beyond the big indices.
You do. And the Nifty Midcap 100 barely inched up, gaining only 0.08%.
And that's a red flag.
It's a huge red flag. When large caps rise but the mid caps are flat, it signals that the gains are narrow, concentrated. It suggests a real lack of confidence in the wider economic recovery story.
Okay, shifting focus to corporate performance, Hero MotoCorp is having a spectacular run.
Hitting a 52-week high, no less.
After reporting double-digit growth in Q2 revenue and net profit, their pivot is clearly working.
It's more than a pivot, it's execution. That growth is fueled by their huge success in the EV space. Their Vita brand has secured record market share.
And analysts are expecting that sales growth to continue.
They are. It's a great example of an established player translating that legacy trust into new age market dominance.
Now, contrast that momentum with the broader banking sector.
A much more muted story there.
Very muted. Indian banks recorded net profits rising only 2.5% in the first half of the fiscal year.
And that's despite an impressive 11.3% credit expansion.
Which sounds completely counterintuitive. Why are they lending so much more but earning so little extra profit?
This brings us back to a crucial technical term: net interest income compression, or NII compression.
Okay, so break that down for us simply.
Well, think of it this way. Banks have the rate they lend money out at and the rate they pay to get deposits in.
Yeah.
That's their cost of funds.
And the profit is the slice in the middle, the margin.
Precisely. The RBI's rate cuts force banks to pass on those lower loan rates to borrowers to stay competitive.
But their own costs didn't go down as fast.
Exactly. The interest they pay on deposits, their cost of funds, is staying stubbornly high because competition for savings is so intense.
So they're making way more loans, but the profit slice on each one is getting razor thin.
It's a pure margin squeeze, and that's why all that volume growth just hasn't translated into profit growth.
That corporate reality, the margin squeeze, it sets the stage perfectly for the biggest economic story this week, which is India's external Achilles heel trade.
A policy-induced crisis. The data is a structural shockwave.
I mean, the numbers are just staggering. India's merchandise trade deficit hit an unprecedented record high of, what was it?
$41.7 billion in October.
That isn't just a big number, it's a profound imbalance that puts immediate, serious pressure on the current account and the rupee.
It does. And there are twin engines driving this record hole.
So let's unpack them. On the export side, merchandise exports contracted sharply,
Falling 11.8% year on year. And we know this wasn't about poor product quality or lack of demand.
No, this is pure geopolitical friction.
Almost entirely. That severe drop is attributed to the persistent 50% tariffs imposed by the U.S. back in August.
And to be clear, a 50% tariff isn't a negotiating tactic.
No, it's a crippling immediate block. Exports just to the American market fell 8.6% in October. Key sectors just cannot compete with that.
So while exports are seizing up from external hostility, imports are soaring.
Up 16.6% year on year. And this wasn't capital machinery for industrial growth. This was a consumption shock.
The direct result of domestic policy.
It's the unavoidable short-term cost. The GST 2.0 tax cuts in September successfully fueled strong festive season consumption. A win for domestic growth. But that demand translated straight into a massive spike in imports.
And the most dramatic symptom of this, the one that really tells the story, is gold. Gold imports specifically tripled in value.
They did. So you have this domestic policy win colliding with a hostile export environment. And the result is this detrimental multiplier effect on the trade balance.
Leading to that astronomical $41.7 billion figure.
The good news, though, is that diplomatic channels are addressing the friction. The Indian government confirmed that the first part of the bilateral trade agreement is close to closure.
Which would eliminate those reciprocal tariffs. That has to be critical.
It is, because if those 50% U.S. tariffs remain, that export contraction becomes structural.
And we also saw an interesting commercial move aimed at narrowing that trade surplus with the U.S.
Yes, state-run energy companies signed their first ever structured annual deal to buy LPG from the U.S. A commercial bridge, really.
Designed to ease some of that political tension while solving a domestic energy need.
Exactly. Now, moving from economic warfare to strategic positioning, India is continuing its geopolitical balancing act.
Right. Emphasizing strategic autonomy.
High-level meetings were held yesterday in New Delhi and Moscow to finalize the agenda for the 23rd Annual Strategic Partnership Summit.
And that's scheduled for early December. That partnership remains a cornerstone, especially with all the choppiness in the U.S. relationship.
It does. Meanwhile, domestic security challenges remain complex. There's an update on the Red Fort terror attack investigation.
What's the latest?
The NIA made a second major arrest yesterday, Jasir Bilal Wani, an associate of the alleged bomber. But it's the technical details of the attack that are so concerning.
What have they found?
The investigation confirms the bomb used a highly volatile mixture of TATP, triacetone triperoxide, and ammonium nitrate.
Which is very difficult to detect.
And very difficult to make. This isn't the work of amateurs. TATP requires specific knowledge, specific supply chains. It points to a highly organized, trained operation.
That really does highlight the need for constant vigilance. Now, on the diplomatic front, a major update for Indian travelers regarding Iran.
Yes, the Ministry of External Affairs issued a strong advisory yesterday. Iran has suspended visa-free entry for ordinary Indian passport holders.
And that's effective November 22nd. Why such a drastic measure?
It's to counter a really severe surge in crime. Criminal gangs have been luring Indian citizens with fake, high-paying job promises.
And then kidnapping them on arrival for ransom.
Yes, they're exploiting the visa waiver facility itself as a tool for human trafficking. This intervention is about prioritizing citizen safety over ease of travel.
It's shocking. Okay, finally, let's shift to governance. The Supreme Court has applied a significant check on a major piece of recent legislation.
The contentious WAC Amendment Act 2025.
So tell us why this intervention matters and what specific provisions the court stayed.
Well, it really underscores the judiciary's assertive role in balancing reform with protecting fundamental rights. The court temporarily stayed several key and politically very controversial provisions.
Specifically?
Those mandating the inclusion of non-Muslim members on WAC boards, and even more controversially, the requirement for individuals to prove 5 years of practicing Islam to declare a WAF.
Requiring proof of practice for 5 years, I mean, that's a dramatic change in legal precedent.
It is. Critics argued it encroached on religious freedom and community autonomy. By staying these clauses, the Supreme Court is hitting pause to allow for a deeper constitutional review.
All right, now for our innovation spotlight. A crucial advancement in India's quest for strategic technological independence, we're turning to ISRO.
And the Gaganyaan human spaceflight mission,
A huge milestone.
a crucial safety milestone. ISRO just had a successful integrated main parachute airdrop test, or IMAT. This qualifies the entire 10-parachute recovery system. This is the difference between a successful splashdown and disaster.
And we hear about redundancy, that the system can land safely even if only 2 of the 3 main parachutes deploy. But the real success here was validating something called asymmetric disreefing. This is the complex, scary scenario, right?
It is the moment that makes engineers sweat, and it confirms robust indigenous safety control. Think of it like flying a massive, complex kite. All the main parachutes need to deploy perfectly in sync to handle the deceleration forces evenly.
But if one inflates or disreefs slightly later than the others,
You get an asymmetric load. Suddenly, the entire force is pulling unevenly.
which could tear the module apart or cause it to flip uncontrollably.
Exactly. Asymmetric disreefing is that violent high-stress scenario. Successfully validating the system under that condition ensures that even if one chute lags, the whole module won't tear itself apart. It means ISRO has mastered the safety mechanics for the really tough parts of human spaceflight.
A massive leap in self-reliance for deep space capabilities. A perfect place to end. We've seen a market wrestling with policy signals, an economy dealing with a policy-driven trade wound, and a successful leap in space safety tech. The common thread here, from margin compression to the trade deficit, seems to be the complex cost of rapid, ambitious growth. And just before you go, a quick note. This deep dive commentary is put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.